Hi, my name is Michelle Holmes, and welcome to another edition of CMS Forex News. Today is Thursday, May 15, 2008. New Zealand retail sales declined 1.2% in March and also for the first quarter as a whole, with a slump in car sales leading the way. Taking autos out of the equation, sales fell 0.5% on the month. New Zealand's manufacturing PMI rebounded in April, posting a 51.4 measure. A figure above 50 indicates expansion. The production and new order subcategories improved from March, while employment remained below 50. The New Zealand dollar fell 60 pips to the US dollar following the sales data and set a low near 0.7540 overnight. The Kiwis pared some of its overnight losses following the New York Open, but hit fresh resistance at 0.76 and fell back down. In Germany, GDP for the first quarter grew 1.5%, the highest rate in nearly 12 years. It compares to a 0.3% increase in the fourth quarter. Capital spending was the main catalyst, with a very mild winter helping to boost consumer spending. The Eurozone as a whole grew 0.7% in the first quarter, according to the flash estimate. Growth in Germany and France helped to offset weaker growth from Spain. However, a recent run of data has shown that the German economy and the Eurozone as a whole may be slowing in the face of higher credit costs and a stronger euro. Eurozone consumer inflation grew at an annual rate of 3.3% during April, according to the final version. This matched the preliminary estimates from 2 weeks ago. One surprising result, however, was core CPI cooling to 1.6%, lower than forecast. The euro gained on the better-than-expected GDP news to set an intraday high at 1.5545, but then paired those gains following its inflation results. The U.S. session had a slew of reports, most painting a gloomier picture, yet the dollar managed to extend its gains to test 1.5420. The euro-yen pair hit resistance at near 163 overnight and receded to fall below 162 during New York trading. The pair has been on a strong uptrend for the earlier part of this week and may now be correcting. Industrial production in the U.S. fell 0.7% on the month, with the proportion of factories in use declining to 79.7%. The figures were poorer than expected and were led by a fall in car production. In two regional looks of manufacturing, the New York Empire Index fell to negative 3.2 for May, surprising forecasts on the downside. In April, the index pulled itself into positive territory after it had posted a negative 22 measure in March. The Philadelphia Fed Index posted its sixth straight negative month, though the negative 15.6 result was better than anticipated. Initial jobless claims for this week is 371,000, 6,000 higher than last week's count. This is towards the upper range of recent activity, as firms have picked up the pace at which they lay off workers in the face of poor growth. The total number of Americans receiving benefits increased to a 4-year high of 3.06 million. In Canada, manufacturer sales were down 1.6%, wiping away some of the recent gains seen in February. A decline in the auto sector was the main culprit, though 18 out of the 21 industries reported declines. The weaker manufacturing news did not stop the U.S. dollar-Canadian dollars pair from falling during New York trading. It has established a downtrend during the last 5 sessions, with parity acting as support. Last week, the pair bounced off this level rather strongly, while this week it seems that there is a new determination to break below that level. Tonight, New Zealand will reveal its producer prices for first quarter, and Japan will release GDP figures for first quarter. Overnight, Japan posts industrial production data and consumer confidence. Switzerland reveals retail sales, while the Eurozone will post trade balance. Tomorrow, the U.S. ends the week with data on housing starts, building permits, and consumer confidence. That's it for today. Join us again tomorrow as we wrap up the week right here at CMSFX.com.